Welcome to Macro Crest. We focus on fundamentals for direction, technicals for entries, and overall we're bullish on the dollar. You can also check on the previous video to understand the accuracy of what you're missing. And we're looking at Dixie bouncing off here, but I'm a little bit skeptical due to some instances. So I still believe probably yes, I'm expecting bullish strength from the Dixie, but technically Dixie is bearish. Yes, last week we talked about it and Dixie did exactly what we expected from it, and we now have a new range. So could this be liquidity to mitigate and drop down here, because I expect price to come a little bit lower due to previous inflation data that came out bad, and for such reason I really do have my USD card. So I'm looking at the futures. So if you look at this on the 3 months candle that just closed, it's bearish. Yes. So it's showing weakness in the card, of course, but we look at it, this is a candle previous months, and also technically this is what we are looking at. So I expect a continuation. Why? Because this is just the first break of this point, and then this is the supply zone. For continuation, we go to 4 hours to look at this. Technically, we can see that this is a zone. So I expect price to get in here, change, then drop. And if we that's for card weakness, right? So USD card should go to the upside, and probably when there's more strength from card, then we might see a push and all that. But for now, this is what I'm expecting for the card. And Swiss was supposed to look good also, but it's not so clear as what it wants to do. So this was the analysis last week, which played out, and I expect the USD Swiss to go higher. Yes, so but if I take out this, okay, so we expect this is still the range. This is the range here. Now we have this internal here. So technically price is supposed to go lower. And if you look at it from your 4 hours time frame, price just bounced off this supply zone. So I'll expect a break down here, and we can attack properly. What interests me for next week more is the indices. A little bit, if we look at the JP225, it has been doing good, and I expect price to bounce off this particular demand, which I made mention last week. So now we're looking at this bounce off here, and what I'm looking at is technically this is a supply zone, and long term on monthly, let's look at this is a demand, this area here. We've got our demand here, and price might go down there. And if you're looking at the previous weekly, this is it. So the D1 supply is a high probability area. So technically you might see a push here and then a drop all the way here before going higher. But if the this breaks, we know then we'll be looking at longs. So this is what we're looking at for next week for yen. Sorry about the Japan CA225. We also have the US 30 on our watch list. Now on the monthly, if you look at this, we are looking at the weekly demand area, which is somewhere here. So this is just on my watch list. It's not one of my favorites. Why it's really there is because if you look at it, this is our first setup. This is the second. And I'm considering this a high probability area because all this is a range. The internal of this, sorry, the external of this range, and I expect a pullback into this zone for price technically go higher. But if it doesn't and shows signs of price going down, we should be expecting price all the way down. Why? Because this all this is the bullish leg for this move, and this is liquidity. This is liquidity. That is my little view on the US 30. I also have my US 100 as an as. If you look at this on the monthly, we expect price to go lower, and weekly previous last week is showing us a bearish momentum candle. So this is the demand that technically should push price higher, and then should see a pullback lower. Looking at it from a daily standpoint, this is a supply, expect a pullback and a short. Now, why is that necessary? Because if I take out everything, what we do have is this demand here. We have our supply that we expected price to hold. But last week we had a week to the upside, and now have price going lower. So this was the internal range. This grabbed this liquidity, took it out. So now this is our range right now. This is the range. We expect if price goes into this point, we have a big shot. So looking at it from a D1 perspective, there is our supply, this zone. And also um, we have the German 40. The German 40 is still bullish in my view because of this high and this low. But on the 4 hours, I was expecting a change last week, which didn't come. Uh, it came in a very different light. So this was what I thought was a change, yes. Then took us out in a little loss. I'm expecting that if this should come up here, a break, then we should go. That is, if it doesn't break this point, we should see price go as high as that. But note, this is a range, so this is also a liquidity on its own, being internal liquidity, which makes this point a higher probability area for longs. And then for UK 100 looks interesting. The monthly is telling us price should go higher. On the weekly, we are looking at price in this range, bullish. So what do we do? Looking at this, this is our range. This, all this is internal, and technically you might see price bounce off here to drop as low as this, because if that is internal, it means this is liquidity, and then price should continue higher. But if you want to get it, well, because of this break here, you can expect price to bounce off here first before going high, and then dropping. This would be a high probability, and US 500 is quite interesting. On the weekly, we expect price to go lower. The monthly price is supposed to go lower too. On the daily, we expected price to go higher, which it did technically for a period of time from this angle. So if price breaks this point, pulls back, we would like to look at short, because this is what I would call my break of structure. This is a high. This is our low. So all this is internal range to continue lower. This is the view. And all this is internal of this bullish leg. Let's start with commodities. I do have my silver here, and it's quite interesting. Silver is the demand here, massive demand. I'm looking at high probability on the daily, on the monthly. So previous monthly candle was bearish. We're looking at weekly supply zone, and this is the supply zone up here. This is two area, and we talked about selling the silver last week, which felt very well. And this week we've just closed bearish, telling us it's a D1 supply, and this is our D1 supply, which is high probability and also part of this range right now. So if price pulls back there, you should be looking for our short, and this is high probability as we had this last week. I expect to pull a short. This is what I would like to see next week for silver. For the US oil, yes, we've talked about price coming in. We mentioned that last week on the D1. What I was expecting is price coming into this zone, but now we just created a one D1 demand. So what you look at is using confirmation of this other D1 demand, and this part, which I don't think you need confirmation there. So with this, you will be seeing a little bit of card strength, and this is a high probability area for longs on US oil. For the we've talked about the USD pairs on the futures, so you can work with that on your CFD. We look at Aussie card. Aussie card is monthly price is supposed to go lower, and if price is going lower, it means it's not closing above this point. And if it's not closing above this point, this is our range. So technically price should come as low as that point. So but we'll be working with what we see first. On weekly, previous candle is bearish. Yes, previous candle is bearish, which means the D1 supply. But while looking at it is there's no D1 supply, price is bouncing off this point, and we expect that if we have a break of this point and then a pullback, we should take this short to this point because price failed to close above this point thrice, failed to close above this point 4 times. So this is a range. And this is the risk. Card is quite stronger than Aussie at this point. Aussie Swiss, this is what we have been looking at. Looking at this point as my high and this is my low. So this is my range and I expect this to continue. And for such reason, this is a break and it will have liquidity. So this is our low, this is our high, which last week I talked about price buying from this point. You can watch the previous video, you would know. Now, this price bouncing there and there is a change technically on the 4 hours. So this looks like a good shot all the way to the downside. And that will be a good shot for Aussie Swiss. We also have the Euro AUD. Still based on Aussie weakness in my opinion. Aussie is strong quite, but the inflation is going down a little bit, so the pricing is low. This bullish demand, weekly demand, and it's okay. Let's look at this on the 4 hours. I made mention last week that we were looking at shorting, and we took the shots from this point to this point, which was fantastic. And now we now have a clear view of what we are looking at. This is a demand, this is the demand. Then we have a grab of liquidity, a break. The supply, we took this short here up to, but now we're looking at taking longs from this point. That's for the Euro AUD. For the Euro SU, we have the Euro Swiss, which I'm still holding. Weekly this, so the daily is to continue to the upside. Price just broke structure. Expect price to go higher. We have our GJ, which price did exactly what we anticipated last week, and it's coming again to this demand. We would like to long it again because of pound strength. This is what we'll be looking out for. We have the NZD Swiss, which looks interesting. Price is bullish on this guy. Previous weekly was bullish, so we expect continuation. What is the demand we are looking at? The demand we are looking at is quite very far. Can we consider this a demand? Maybe. So let's just consider that a zone. If that is a zone, would you consider this a break? Absolutely not, because this is the range. So this would be the break. Until this point is broken, until this point is broken, can't be looking for shorts, but I'll be looking for long. So I'll just be waiting. And I expect price to continue higher for the pound NZD. Sorry, NZD Swiss. And then finally, I'll be looking at my NZD yen, which if you look at it, the candle is massively bullish, and technically it is a bullish price action. So this high is a target, and if you go to your daily time frame, this is a perfect zone for us. If we see some pullback, then you can long on this. Looking at it from the 4 hours, nothing much. So that's all we have for the week. Trade safe.